Hi friends, so I'm recording this video on Sunday morning. Just wanted to give you a glimpse of what happened on Friday because the US market had a decent crash on Friday, and probably we'll be seeing our crash on Monday. How much big crash, how much to worry, how much bottom are we seeing, etc. etc. Just few points I'll discuss with you so that you're just prepared for that day of the gap down tomorrow. So first we'll see why we had a crash on US markets on Friday. So all the major indices were around down by around 1.7%. The reason was two. One was that a data which comes from Michigan University in terms of consumer confidence data, it came at around 64%, which was 10% lower from last month. So it was a huge drop in terms of consumer confidence in US, which is a much tracked data, and the reason was that the people are now worrying because of tariff war, which is going to commence or already commenced from Mr. Trump, and the worry of inflation going forwards. They are worrying that because of this tariff war, which is started by Mr. Trump, can lead to a big inflation, and that is why it is denting the consumer confidence of US. So that is one major reason why we saw a fall on Friday. On the other hand, also there was a lowest uh, sales in terms of uh, houses there, and also the prices have reached from around 5 6 years highs. That is because the interest rates are very high, and because the rates of the houses there become so much that the sell has come down drastically. So you are having a twin kind of effect there, where it's looking like the economy is also slowing down, but you are also seeing signs of high inflation. That is the worst kind of economic scenario any country can have. Growth slowing down, inflation going up, which actually leads to deflation, which actually leads to stagflation, wherein your growth comes down drastically and inflation is up, and it becomes very difficult for the central bankers to pump in money or to artificially stimulate the money because inflation is high. This is where the US markets are heading into. I've been telling from last videos, US markets are very overvalued. They are ignoring the tariffs which are being imposed by US a lot. They are actually thinking that yes, Trump is doing a great thing. He might be doing a great thing for America. Yes, he has a mantra of making America great again. There is no denial from the fact. But the side effects are also there. So we don't know how much time the side effects will remain, whether only one data can be trusted to conclude that the economy is slowing down, whether only one inflation report can be taken into confidence for seeing the upper graph of inflation. All these things need to be seen. But the tight labor report, the kind of consumer confidence data, the kind of sticky inflation which US is witnessing, and of course the growth is slowing down as well. All these four factors are a reality. That means the money which was buying dollars a lot, the money which was chasing the US markets a lot, and I told you in my some of the previous videos, US market is valued at around 205% of its GDP. India is valued at around 112% of its GDP. We are so much undervalued in terms of US. All talks about valuations of India. We are half the valuations of US in terms of a very critical factor which Warren Buffett sees a lot, which is the market cap to GDP ratio. We are half of US, almost half of US. Let's say 80%. And US, if tops out, the dollar trade will be over. The money which is chasing the US market is over. I still feel that there is a fundamental macro issue which will start coming into US markets now. The only silver lining for US markets is that probably the corporate tax cut which will come from US, but take it that also has a flip. US has the largest fiscal deficit. It's around 8%. So people are, India has 4.4% in this budget forecast, and we are seeing our macros to be so good. US is at 8%, 8% plus. And if you do the corporate tax cut, which means you're further reducing your income. So US has a lot of things to solve. It is in a bubble. It is heading for a big crash. It should happen anytime. We don't know when it will happen, but US is really in a bubble territory. I've been telling this from a lot of my videos, and that should shift the turn. Now, I'm not saying that because of US going down, India will go up. But I have been saying that India will see a outperformance now. India will fall less, and in case US goes up, will move up higher. That will be the trend now. Yes, the market will still slow down because if US slow downs, our IT companies you have to watch how they perform, and other goods also because US is a big consumer data anyways country anyways. Because of this, the dollar index fall sharply on Friday. The bond yields fall very sharply on Friday. Now they're around 4.4 to 4.4 kind of, I think around 4.4 kind of levels. Dollar index is also cooled down sharply. So all those indexes which were hurting India are all cooling down. US markets are cooling down. China, we are already seeing a big inflow of money. Europe, we are seeing a lot of inflow of money. And even if the war comes to an end between Russia and Ukraine, Europe will be a beneficiary out of it, direct or indirect. And India reaching to its fundamental, let's say, bottom levels, or let's say fundamental levels where the valuation comfort is coming. Seeing all these three things, probably it will be a good thing to see on Monday. Now, what will happen on Monday? We are SG Nifty showing around 175 points down, which means we'll open lower, and I think we'll open lower. Now, this is the best thing which the bears would have wanted. We are entering on expiry week. Bears actually wanted the market to go down to cover their shorts. Now they're getting a gap down, so they're getting a ready-made scenario where the market is getting lower. I think they will vouch for it, and they will do a small selling in the first half of the market, let's say 1 or 2 hours, and you know that this thin volume also market will fall because there are hardly any buyers in the markets now. So with thin volume, they will take the market. They can take the market further lower, and from there they will start capitalizing on their shorts and try to cover their shorts. This is what is looking like that should happen. How much we should worry? It's looking that we are entering into a range of 22,500 uh, very soon, probably on Monday itself, Tuesday itself. We have to wait and watch. But we are reaching to those levels which are termed as a good valuation comfort in terms of Nifty going forwards. Now, uh, whether it is too much to worry, see, it is pure imported fall that we are getting. It is not due to Indian fundamentals, anyways. Now, if we compare US to India, India is at 4.4% fiscal deficit, US is 8% plus. They are at 205 to 4% of the GDP. We are at 110, times of our GDP in terms of market cap. Our inflation numbers are coming on a downside. We saw the CPI inflation report of India was around 4.3%. US itself, it's such a large country, is hovering around 3.3, 3.1%. So a developing country like India with a real GDP growth of around 6.5% has inflation of 4.3%, and a country of US size, which is a developed country and a growth rate of around only 1.5% is seeing inflation at 3.1%. So it's a huge worry for US kind of a country, and according to me, it should fall. US should fall further, but anyways, trades don't happen like this. Markets can remain overvalued for a long period of time, so I don't see them, cooling down on my terms, but they will happen sometime. But Indian scenario, our fundamentals have become extremely good. Dollar index coming down, bond yields going down, our inflation under control, our fiscal deficit under control, and our GDP numbers getting better and better from here on. The stimulus has already been given by RBI in terms of rate cut. The budget has been good. It is boosting the consumption. So, with seeing all these factors, we might see some kind of a short covering also on Monday. It might happen that we open lower, but we try to cover the gap. It should not happen that we close in positive. If that happens, it will be a great day. But even if we close negative, but we close a day high, it will give you a signal that probably our bad days are coming to an end very, very soon. And I've been telling this for a long time. Yes, I've been not proven right for long time, but what I do is I do just a fundamental analysis, and the markets can behave in their own way. See, why the markets have been falling is not because of now Indian fundamentals. The money has gone to China, the money has gone to Hong Kong, the money has gone to France. $32 billion of money has gone to France. Europe has been on the all-time high because of the probably the chances of war coming down, also the chances of the defense stocks going up because Trump is forcing them to increase their defense expenditure. So seeing all these things, and considering that India is reaching to its pretty kind of a fundamental bottom level, a lot of stocks have been already broken down. I think I was seeing a figure: 85% of the stocks are now trading at 25% from their highs lows, which means 25% they are broken from their highs, and around I think 50% are in the range of 35 to 40% down from their highs. So India has gone through a big churn, India has gone through a big, cooling off, and India's fundamentals still great. When I mean, a country, imagine a country going on 6.5% GDP growth in a real GDP with inflation added, we are still growing at around 10.5% nominal GDP growth rate, which is huge, which is just huge. So, considering all these things, be careful on Monday. I will not recommend to go short on Monday if we open gap down too much. But yes, if you see an intraday recovery, you can still go for shorts. I think Monday will be a day of capitalization. We might see a lot of volatility on Monday, but do watch your positions. Be absolutely hedged. And according to me, the thing which we were looking for, global meltdown, US markets meltdown, that is happening now. This is what we were waiting for. And how much advantage it will be to India, you have to wait and watch. But I foresee a relative outperformance from India now from US going forward. So I just thought I'll share with you because Monday will be a happening day. So thank you for watching the video. Thank you so much.